We are back with some breaking economic data.
Yeah, and some big numbers. The U.S. economy added a more than expected 303,000 jobs in March, while the unemployment rate came in at 3.8%.
Joining us now to break it down is NBC News senior business correspondent Christine Romans and Investopedia's editor-in-chief Caleb Silver. Good morning to both of you. Christine, we were just singing hot, hot, hot. Walk us through the numbers here, how they compare with the previous month.
Yeah. Too hot, maybe too hot here, and that's what Caleb, I think, is going to tell you. But look, we had this number come in, and this number at 303 is much more than expected and brings 4 months in a row of above 200,000. You had a couple of revisions higher, frankly, so you saw more job gains overall in the beginning part of the year than we thought. And altogether, guys, you're talking about an average of 230,000 jobs created every month over the past year. That is a booming job market. I want to be real clear. This is a booming job market here. And it's so fascinating to me, too, because when you look at the unemployment rate, it went down to 3.8%. You still have this long run of an unemployment rate that has been historically low, near 50-year lows now, for months here. So where do we see all these jobs created? A lot of them in government, 71,000 there. Construction jobs, 39,000 there. Healthcare, 71,000 jobs in healthcare. And those are in hospitals. Those are in long-term care facilities. Those are every kind of sort of healthcare job you can imagine. So this is a labor market firing on all cylinders, defying a Fed that has raised interest rates over and over again. A very strong report.
I wrote down an underline, booming, because Christine said it twice. So, Caleb, tell us, what does that mean about the broader economy? What's your reaction?
Yeah, not only do you have strong jobs growth, you have wage growth that continues month after month as well. That's one thing the Fed's looking at as well. When wages rise, companies have to raise prices. That means that inflationary cycle just keeps going. But Christine pointed out, these are good-paying jobs, and we have salary increases. We like to look at like a 3-month average of job gains and revisions. It just keeps getting stronger and stronger. We thought it would weaken by this time. So we don't want to say it's too hot because you want a lot of job gains, you want employment. At the same time, this is not helping the inflation picture.
Christine, you broke down some of the sectors. Is there anything else that stands out or areas where we see big gains or any losses?
Well, let's talk about those wages. Last month, wage growth was 4.3%, and that worried some people that those higher wages, companies have to raise prices sometimes, right, when they have to pay higher wages all the time, and that can feed into the inflation story. So it cooled a little bit to 4.1%, but that's still really good, you guys. 4.1% gain in your paycheck, that is more than making up for higher grocery prices, higher gas prices, and the overall inflation picture. So that could, down the road, lead to people feeling a little bit better about the economy. Remember, Caleb and I for months have been saying, guys, the economy is good. The big debate is whether this is a better economy than the Clinton years or the best economy of our lifetimes. And that's not what you see in any of the public polling, because people are still so perturbed about inflation and higher prices overall.
God, it's so interesting. Caleb, first, countdown clock, next Fed meeting.
You mean 26 days, 5 hours and 20 minutes, or the one in like 61 days, 5 hours and 20 minutes, because we're not getting a rate cut at either of those. We probably won't see the Federal Reserve touch interest rates until like the middle or end of summer, if they touch them at all. That debate used to be 3. Now we may not get any rate cuts this year. That's why the market's been spinning out a little bit this week.
By the way, we do not prep Caleb to tell him that we're going to ask that. He just is ready to
because
go.
Caleb is the clock. Yeah. That's why Caleb actually is the clock. I mean, I guess, Christine, my question here is, does something have to give at some point, or can we just keep doing this for a while?
Okay, these numbers have defied expectations for what, Caleb, 2 years, at least 2 years? You got, before this report, 14.9 million jobs created just in this first couple of years of the Biden administration. So you've had a recovery from the crash that was COVID, the COVID crash. And now you're back to pre-pandemic levels. For leisure and hospitality, for example, this month, all of those bar and restaurant, leisure and hospitality jobs, they're back. Now we're back to February 2020 levels. And that's an important milestone here. So you've shaken off a lot of the damage from the pandemic, and now you're growing the labor market. You're growing the economy going forward. Productivity is very good. Immigration is also part of this story. You've got an influx of workers, legal and otherwise, frankly, that are feeding into the labor market as well. So there's just a lot going on here that makes it a fascinating, fascinating job market and a really kind of historic moment.
We're glad we have both of you here to help break it down. Caleb and Christine, thank you both. Appreciate it.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.